AM 560, The Answer.
The content and information on Real Estate Airwaves is for informational purposes only and should not be regarded as legal advice. Real Estate Airwaves does not provide legal advice and make no warranty or representation regarding the information on the show. Real Estate Airwaves shall not assume any liability for damages of any kind whatsoever relating to the use, misuse, or reliance of this information. The listener should conduct their own investigations, analysis, due diligence, draw their own conclusions, and make their own decisions. Any areas concerning taxes or specific legal or technical questions should be referred to lawyers, accountants, consultants, brokers, or other professionals licensed, qualified, or authorized to render such advice.
No fluff, no hype, no gurus. You're listening to Real Estate Airwaves on AM 560, The Answer. Get the inside information you need to find, fund, fix, and flip real estate in today's market. Joshua Ingalls and Vincent Pace share their secrets to minimize risk, maximize profit, and get deals done. We're pulling the curtain back and sharing the knowledge you need to succeed in real estate. And now, your hosts, Joshua and Vincent.
Welcome to the show. We're talking about how to get private money to do real estate deals in your backyard. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. My name is Joshua Ingalls. I'm an active real estate investor here in the Chicagoland area. Over the last 3 years, I've flipped over 60 fix and flip deals. I'm also an active real estate agent with United Real Estate.
And I'm Vincent Pace. I head up Barnett Real Estate Investment Finance. We provide short-term real estate investment capital for your real estate investment deals.
The money man.
The money man.
So today we're talking about how to get OPM, which stands for other people's money, and how to put it in HIP Bank, which HIP Bank is right in your pocket. So this is really exciting. We're going to tell you all the secrets on how you can get the money to do your real estate deals. So what is private money? Well, private money is essentially relationship lending. So these are people that you know, friends, family, that rich uncle, people you meet at real estate networking groups, perhaps even your mailman. There are private money lenders everywhere, and you need to start looking that way when you meet people.
So the obvious place to go first is people you know. Start with your friends, family, that rich uncle. Finding those is as simple as looking in your address book and thinking about who might be interested in doing something like that. When you want to expand that a bit, you can start going to real estate networking events and other places where you're going to find other real estate investors. A common sort of type of real estate investor is somebody who's got some money, is looking to get it exposed to real estate in some way, but doesn't really have any experience. That's someone that you could work with to leverage their financial resources with your experience, or even just the time that you're willing to spend, and find real estate deals using their money.
Yeah, remember, people that don't even necessarily have money can become private money lenders. Last week, we talked about how you can use credit cards to essentially get money at 0% interest rates. Now, your private money lenders can do the same thing. So again, these could be people that you know from high school, some friends from college, even perhaps someone from your family who doesn't have that nest egg, but they've had a great job over the years and have that great credit.
So Josh, when you're meeting a private money lender, how do you go about starting with an introduction and ending up with figuring out whether they can provide you money?
That's a great question. If I'm meeting somebody at a networking event, perhaps they're another real estate investor, first I'm going to give my elevator pitch, who I am and what do I do. And then I find out some information about them. Hey, what's your name? How long you been in the business? How many deals do you want to do this year? What price point are you looking at to purchase houses? Hey, if I brought you a deal that made sense, how would you finance that deal? Now, if they say they're going to use cash or their own money, bingo. These are potential private money lenders. And we want to get to know them because, again, private money lending is exactly what it sounds like. It's relationship lending. So you need to build a relationship with that person. But if somebody tells you they're a cash buyer if they're truly a cash buyer, well, that also means that they're a potential private money lender, that maybe they could perhaps lend you money with a mortgage and an interest rate, or perhaps they're a joint venture partner for you to do deals as well.
Now, that sequence of questions might not end up with that bingo where they say, I've got cash for you. And in those cases, you might want to explore a little deeper to see if you can use any of the methods that you could use personally. Can they get a line of credit? Can they get a home equity line of credit? Do they have an IRA or a 401k that they convert into a self-directed and then use to invest in real estate? So you can take that conversation to that great answer of, I'm going to use my own money. And if you don't get there, then you have an alternative through these various methods that you can do yourself.
Yeah, and so what are different networking groups that you might want to attend? Well, of course, we have a group that meets on the first Tuesday of every month. We're actually going to be talking about how to raise private money on December 6th. We meet at 3009 North Kedzie in Chicago. You can visit fliptoriches.com for more information about that meeting. And again, there's lots of active real estate investors there. You can go on meetup.com. I know, Vince, you have a meeting?
Yeah, in addition to being at Josh's meeting each time with a booth in the back, we have our own meeting we host on the third Monday of each month at our offices in Northbrook. Come to realestateairwaves.com and click through to find details on that.
Yeah, and also think outside of real estate. What are maybe some charity events that I can attend? If you're attending a charity event, these are people that are philanthropists and probably have some extra money to, obviously, if they can donate money to a great cause, well, these are people that are perhaps great private money lenders. You also want to think of maybe going to some different stock events. You know, there's different trader events that you can go to. If people have money to buy stocks, well, they probably want to diversify and also do real estate as well.
Most investors will want some kind of exposure to real estate, and often real estate can provide better returns if properly executed and if the right deals are found. So that can be an attractive part of a portfolio of someone who's looking to diversify.
Now, there are different websites you can go out there and get a list of people that have lent private money, but you got to be very, very careful with those because, again, private money lending is relationship lending, and there are SEC guidelines that you need to follow. So there's a national SEC, and there's also a state SEC. And what they say is you can't just blindly solicit people for money. You have to build a relationship with that person, and usually that's defined as 3 or 4 conversations before you start talking about lending money to you to do real estate deals.
So some ways that the federal and state government's restrictions are probably going to impede you making use of these lists is that you probably should not do things like send direct mail. You should not create a website asking specifically for money. If you're going to try and do any of these things or even get closer and move away from relationship lending, you need to talk to an attorney to make sure you're not running afoul of any of the laws that could get you in trouble.
Yeah, you can register with the SEC if you want to do those things, but it's not something that you can just simply set up in a matter of days. There is a process, there is an application process, and then they're going to make you only solicit what are called accredited investors. Now, again, when we're doing relationship lending, so again, friends, family, that they don't necessarily need to be SEC accredited. They don't need to be accredited investors because it's relationship lending and they're borrowing with a mortgage and promissory note. You're not pooling anyone's money.
Accredited investors, there's definitions for those. They typically involve a certain amount of net worth, a certain income, and various other financial metrics that basically allow the government to say, okay, this guy knows enough about what he's doing that I don't need to protect him. You know, the government's generally out to protect the little guy. So they're worried that you're going out to mom and pops, you're shopping this, and they're going to get a bad return. They want to avoid that from happening. So that's where these limitations ultimately come into place.
Yeah, they're making sure that you're not running some sort of pyramid scheme where you're borrowing money from one investor to pay another investor, and then you take that money to pay another investor. So that's why those SEC guidelines are in place, and that's why we need to focus on our sphere of influence. But there's so many people that really have access to money. Again, listen to last week's episode on realestateairwaves.com. These people are the people you went to high school with, college with, people that you're meeting at these charity events. That's where you will get great potential lenders, but you need to get to know them.
One last limitation you might run into, just depending on which state you're in, is that some states do limit how much of an individual's net worth can be used for private financing. So another point where you're just going to need to talk to some professionals to see if you're going to run into that with the lenders or with the relationship lenders that you're working with.
Yeah, and the first 50 people to contact us will actually be getting a copy of a PowerPoint presentation that I used when I meet with somebody to raise private money. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. Stay tuned because we're going to be talking about how to pre-qualify a person with private money.
Mortgage rates are still near historic lows. If you're looking to buy your first home, upgrade, downsize, invest, or refinance, contact Matthew Ewald from First Advantage Mortgage, a Draper and Kramer company. Matthew's been a trusted mortgage consultant for over 13 years and has options to fit your unique needs. With 40-plus investors, call Matthew today at 630-376-0484. That's 630-376-0484. Or apply online at mortgagechicagoland.com. Company NMLS 2551, NMLS 198323. Illinois Residential Mortgage Licensee, Equal Housing Lender.
If you want to do real estate deals, you need to learn the systems. Visit fliptoriches.com for info on workshops happening the first Tuesday of every month. Meet me, Joshua Ingalls, and other active real estate investors in the Chicagoland area. We give the most value possible with networking and information for new and seasoned investors. We meet the first Tuesday of every month at 3009 North Kedzie in Chicago at 6 p.m. Check out fliptoriches.com. That's fliptoriches.com for all the info now.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. It's all about making money with real estate. Now, back to Real Estate Airwaves on AM 560, The Answer.
This week, we are talking again about how to get financing for your deals. In particular, we're focusing on private money, relationship lending, getting money from people you know. This segment, we're going to focus on pre-qualifying your capital provider. How do you figure out that this person that you're speaking to is a good fit for the kind of investments that you're looking to do? Well, the first place to start is simply by doing your due diligence on this person, researching them. What are they up to on Facebook, LinkedIn? Do they have anything going on that you can find in Google? You may be able to find deals they've done, information about things they've been involved in. A lot of people, when they do a real estate deal, will post it on their social media. So if you can check that, you can kind of see what they've done, what sort of things they're trying to do, and you can learn a lot about them. This will allow you to build sort of a conversational rapport that will make it easier to build the relationship you need to get them comfortable to provide you with capital.
Yeah, you want to try locating commonalities that you might have. For example, let's say they're a snowboarder and you love snowboarding. Perhaps they're an avid bicyclist and you like bicycling as well. Something, again, if you have nothing to go off of, if you have kids and they have kids, that everyone loves talking about their kids. So find ways that you can build rapport with these potential private money lenders.
This is all pretty common sense, but it bears mentioning because of the importance of this is relationship lending. So you need to have some sort of relationship to build on with them, and finding these connections is a great way to build that foundation.
And when you meet with them, what you're going to want to find out, or you can do this over the phone, finding out what are their investment goals. Again, this is after talking to them 2 or 3 times, building that rapport. So what are their investment goals? Meaning, how much did they make in their investment the last 12 months? How did it do in 2015? Or how's their money performing for them in 2016?
You might hear numbers like, oh, I got 5%, I got 7%. 7% would be actually pretty decent. And you can tell them, I'll give you 2% more than that. You can come up with some number that entices them to move some portion of their capital into investments that they'll do together with you.
Yeah, so by finding out how their money has done over the last 12 months, let's just say, for example, they made 5%. Well, that's actually pretty good. Even 7% is better, but if they made 5%, that's pretty good. But we're going to want to see, are they happy with making that money? Perhaps their goal is to retire in 5 years, and in 5 years, 5% isn't going to cut it. You know, the rule of 72, and I'm getting a 7.2% interest rate, it will take me 10 years to double my money. So this is something that you're going to want to teach any private money lenders that you meet with, is if they're only making 1%, it's going to take 72 years to double their money. I'm sorry, but most people don't have that kind of time.
Now let's look at that from the other end. Let's say you tell them, hey, how much do you want to make? And they say, oh, I want to make 20%. Well, that might be a little unrealistic. So you might want to tell them, well, would you turn down, say, an 8% return, a 9% return in a very safe investment if you could learn about it? That's kind of how you can, that's one method to counter the higher numbers that you might hear from time to time from private lenders.
Yeah, because everyone in the world wants to make 20% on their money annually. But is that realistic? No. So that's why what Vince said is framing it. So you're telling me you'd turn down that 8% return if it was safe, and you can learn how to invest in real estate. Again, we're teaching people financial education and how to invest in real estate. So it's a very, very valuable resource. And we want to identify sources of capital that they might have. So, for example, some people might just have a big amount of money sitting in a bank account. Some people are that liquid. Now, that's not going to be the majority of people, but you will meet people that might have $200,000, $300,000 that is just sitting in a savings account earning less than 1%.
They also may have credit that you could take advantage of. And as we discussed in our previous episode, if they don't, you can encourage them to do so through the same methods that you would get credit yourself. Then that could include both credit cards and it could include home equity lines of credit. If they have a house that's either free and clear or if it has equity built up into it, they can get a bank to provide very low interest rate capital that they can then use to provide to you, and they can make a margin off of that.
Yeah, most of my lenders are in their late 40s, in their 50s, in their 60s. That's the majority of my private money lenders. And a lot of them have their houses paid off. So they can use that home equity line, borrow at 4% from the bank and relend it to me at 8, 10%, and they're making a spread on that money. They're leveraging money, and they are initially creating money out of thin air, by taking advantage of that home equity line.
Another place that you'll find similar liquidity sources is going to be in retirement accounts, 401ks, IRAs. These would need to be converted to self-directed, and it's probably going to be found in the sort of same age group that you see Josh's investors coming from. The 40, 50, 60-year-olds who've built up some money in their accounts, and they're looking to get a greater return than the market-managed accounts will allow them to get.
Yeah, you also want to consider if somebody's an active trader, how have they done consistently year after year after year after year? More than likely, they're not going to be performing at the rate that we can pay them, in my opinion, in a safer investment. Now, again, no investment is 100% safe, and you need to make that clear with your private money lenders. But it's not like the stock market, which is so volatile that a stock might be worth $100 today and $50 tomorrow. Real estate, even in a decline, the worst declines we've seen in our economy have been at like 12% over a year's time. So if a house is worth $100,000 and we're at a 12% decline, which is record-breaking decline, at the end of the year, that house is still worth $88,000. Stocks do not have, they're much more volatile, and much more risky, in my opinion.
Stocks also can form the basis for liquidity. They can be used as an asset on which a bank can provide capital. So if a person is going to hold stocks, that's another potential source for liquidity that they could ultimately use in real estate investments.
And when you're talking to private money lenders and discovering their different sources of capitals, you need to find out how long is it going to take to get access to the money. So, for example, someone might have their money tied up in a long-term CD. And that money they might have that money, but that money may not be accessible for a couple years.
Other times, the money may actually need to be held in a particular account. Let's say if they've got some sort of financing arrangement with a bank, and the bank requires them to keep $100,000 in one of their accounts, that liquidity's there, but it's not going to be easy to use for any particular purposes.
You also want to, let's say somebody does have money in an account that's not so liquid, like a CD. Find out what the penalty is. If they're making 1% on a CD and you're paying an 8% interest rate, more than likely the fees that they're going to pay to take that money out, you will likely make up that money in just a matter of months. So sometimes, even if the money doesn't seem liquid to them, you want to determine, well, let's find out, what are the fees if we pull the money out and invest it in real estate? Because a lot of times they will make a lot more money in a year's time. And if you compound that over several years, it can be many, many more times that they're going to make that money back as opposed to getting charged some sort of fee.
And also, by understanding their liquidity position, you can better understand what other options you may need to take. We often see our borrowers working with private money providers. And a lot of times the reason they come to us is because that private money provider, not that he doesn't have the net worth to support the whole loan, but because the portion that would support it is not liquid. So he brings a liquid portion, we bring the remainder, and that's one way to get the deal done.
Yeah, and you want to get your foot in the door with a lot of private money lenders. Just because they're not lending you all of their private money right off the bat, it takes time. The more deals you pay them off, it's like money all of a sudden keeps appearing from a lot of my private money lenders as I build that relationship, as I pay them off, and they get paid the interest rate that is set in the terms. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of the private money lending presentation that I use.
You're an investor, a lender in commercial real estate, or you're an attorney, and you use a title company. National Title Solutions wants a chance to be your title company. Give them a shot at your business, and you'll find out why they're the best choice. Most title companies keep banking hours and have no flexibility. National Title Solutions will do whatever it takes on your timetable. You'll save money, too. Give them an opportunity and see the difference. Convenient offices all over. National Title Solutions. Call 800-NTS-2700. 800-NTS-2700.
This is Joshua Ingalls, broker with United Real Estate and radio show host. When I need to pre-qualify a buyer, I use Matthew Ewald from First Advantage Mortgage, a Draper and Kramer company. I've worked with Matthew for over 2 years, and I highly recommend him to all my clients and investors. Call Matthew Ewald today at 630-376-0484. That's 630-376-0484, or apply online at mortgagechicagoland.com.
Company NMLS 2551, NMLS 198323, Illinois Residential Mortgage Licensee, Equal Housing Lender.
The Chicagoland Real Estate Investment Group invites you to build your network in real estate investing and learn from the region's experts. There's no charge to attend, and there won't be any hard sell for expensive courses. Join us on the fourth Monday each month in the North Shore. For more information, visit us at meetup.com/ChicagolandREI. Again, that's meetup.com/ChicagolandREI. Meetup.com/ChicagolandREI.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. Now, back to the show that gives you the insider info. Real Estate Airwaves on AM 560. The Answer.
Today, we are continuing to talk about how to get capital for your real estate investments. We're focusing today on private money, and we'd like to dive in a little bit more into how you actually present what you're offering to the private money provider. In our last segment, we were discussing how to kind of vet your potential providers of private money. We spoke about building a rapport with them through doing some due diligence on them, trying to figure out what they like, what do they have kids, sorts of things that you can sort of build a conversational basis with them. When you're going to do your actual presentation, showing them that, hey, this is what my company offers, this is what I can offer you, start out with just building that rapport. Use that research you did on them or that information you got conversing with them previously to shore up that relationship through additional rapport. Once you've kind of gotten that rolling through your presentation, the next thing you're going to want to dive into is actually an overview of you and your business. Why do they want to provide their money to you to invest in real estate? Why is that a safe deal for them? The probably core thing here that you're going to want to focus on is your track record. How many deals have you done? What's been the success rate of those? What kind of deals are those? You can provide case studies of deals you've done. You can provide a list, a track record. Then the question becomes, well, what if I haven't done any deals? Well, in that case, you're going to want to show them as best you can what you've been doing to prepare for these kinds of deals and any other relevant experience you have. If you've been a real estate broker for some time, that's a great experience to throw out there. If you've helped your brother-in-law do construction work at his house and manage contractors, that's relevant. Anything you can kind of put out there to show them that you're going to be able to find and manage these real estate investment deals will help get them comfortable in providing you money.
Yeah, perhaps you're involved with a real estate education program that you have resources within that. You can use that as leverage. Perhaps even attend our meetings and, bringing up the fact that you attend our meetings every single month, or perhaps that you're partnering with somebody who does have business. So a lot of people get stuck in that, well, I haven't done a deal yet. Well, you have a lot more experience than you may realize. Now, you want to give them an overview of the private money process. So, of course, how do they get paid? What fees are involved? And again, the answer to fees is no fees. That's the beauty of what we do. A lot of times when somebody has their money in a 401k that's not self-directed, they're getting ripped off with fees. Most people don't even know what fees they're being charged. And again, that's something that you're going to want to educate people on, is the fact that we're not charging any fees whatsoever for someone to invest with us.
As a lender, I would reemphasize this. One of the ways we've structured our program as a lender is we keep fees to an utter minimum. Basically, the only third-party fees, like the appraisal, are the only things that we charge, and borrowers love it because a lot of lenders in the market charge fees for this, fees for that. All sorts of fees hit you up at all sorts of times, and it's aggravating. So the fact that private money providers can come to you and know that they're not going to be getting hit up for this and that, it's a more comfortable way to invest for them.
Yeah, and you're going to want to, of course, outline how long is their money going to be invested with you, and what's the minimum investment required. On the last break, I talked about some people might have more money than what they're willing to lend you on their first deal. That's normal. People like to get their foot in the water first, and the more and more you build that rapport and more times you pay them off and pay them that interest rate, money will appear.
The next thing to dive into them with is, how are they protected? If they're protected. So a lot of times, if you're going to structure as a loan, and we'll get into structuring this more in the next segment, but if you're going to structure as a loan, then you'll provide them with some kind of first lien position, a mortgage, a promissory note. If it's not a loan, sometimes you'll provide a personal guarantee. These kinds of protections are valuable to investors. Now, you may not want to provide them, and that's your decision ultimately to make, but you want to be clear with them what kind of protections they'll get of this nature.
Absolutely. You're going to want to outline, a big question I get, well, what if the house burns down? Well, that's the great thing we have insurance for, and you're actually listed on that policy as an additional payee. So just educating people on how their money is secured, and if it's an unsecured note, well, then you're going to personally guarantee that money. Now, when you're meeting with potential private money lenders, you have to have the mind frame. Remember, you're not asking for money. you are offering an opportunity for someone to invest with you. Everyone that I've met, and I talk about this, I'm very passionate about private money lending because there's no other alternative, in my opinion, that people can get these kinds of returns in a safe investment like real estate. Again, you want to educate, and you want to let people know, hey, I don't need your money, and I don't need it right now. Even if you do need the money, you don't want to come across that way. People can smell desperation, and always approach it from the point of you are offering them an opportunity to invest with you.
If they do smell the desperation, they're going to ask for more. They're going to ask for higher returns, and you don't want to put yourself in that position. So whether you need it or not, you don't.
Yeah, and if they seem that you seem really desperate, they might not even lend their money to you. So again, framing is extremely important. We're going to be talking about that on December 6th at our meeting at 3009 North Kedzie. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of the private money lending presentation that we use.
Real estate agents are cheap. Many agents will only market your home on the MLS and put a sign up. Demand more. Joshua Ingalls invests in aggressive marketing, including high-def video, 3D virtual tours, professional photography, a custom website, and mailers, so you can get the most amount of money for your home in the shortest amount of time. Call Joshua Ingalls, broker with United Real Estate Chicago, at 630-544-1504 for a free home valuation, or visit HomeTeamIL.com to learn more.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. Now, back to the show with real estate info you won't find anywhere else. Real Estate Airwaves is on AM 560, The Answer.
Welcome back. Today we are talking about how to raise private money so you can do real estate deals. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of the private money lending PowerPoint presentation that we use to pitch people to raise private money. Now, there's a couple different ways that you can raise money. Number one is debt, and number two is equity. And now what debt is, it's going to be getting a promissory note. Now, if the lender is secured, meaning it's tied to a specific property, they're also going to get a mortgage. So just like when you get a mortgage, let's say, for example, at Chase Bank for your primary residence, you can't sell that home until Chase is paid off first. The same is true for your private money lender. Instead of Chase being on the mortgage, their name or their entity or their trust is on the mortgage, and they always get paid first.
Beyond that, you can put your investors on the insurance policy. That's going to be pretty common when it's secured, because any secured investor is going to say, hey, if this house burns down, I'm left with dirt. And they're going to want more than that. And so an insurance company can help them hedge against that risk.
And you're going to want to get a special kind of insurance. It's called vacant dwelling insurance. So these are houses that we do not live in. So let's say, for example, you get the wrong kind of insurance and the house burns down. Well, actually, the insurance company will not cover that because someone was supposed to be living in the house. And you also want builder's risk on the house. So it's called vacant dwellers with builder's risk. So this means if the house burns down, if somebody knocks a wall out of the house that they're not supposed to knock out and the house collapses, well, it's still covered because you have the right type of insurance. So even educating the potential lender that you know the difference between a homeowner's policy and the difference between vacant dwellers with builder's risk.
Private money lenders may also ask for a personal guarantee. You have more leverage to push back against that if they're secured, if they have a first lien mortgage against the property. You may or may not succeed, but it's going to be easier when they know they have security in the property itself.
Yeah, and if somebody, let's just say, I don't want to have to pay you every single time you sell a house, and then I got to wait for my money to be reinvested in a house. Some lenders will actually prefer to lend you money in an unsecured way. And what that means is they're lending their money to your entity, and it's not necessarily tied to a specific property. Now, when most lenders do this, they are going to want usually some sort of personal guarantee. If, let's say, for example, you dissolve the company and the company goes bankrupt, well, they're still going to want their money, and that's why having that personal guarantee in an unsecured setting is important.
Unsecured loans can also be made property specific, so there's a variety of ways to go about this. You'll just need a better relationship generally where there's more trust or maybe a long track record with that particular lender. In most cases they're also going to ask for a personal guarantee, but again, it's going to be up to you to negotiate away from that if you need to avoid it.
Yeah, and another great thing is you can educate the lender on, hey, do you want monthly payments? Do you want quarterly payments? Do you want just one lump sum when the house sells? Now, some lenders will prefer just to be paid at the end because they don't want to have to collect checks every single month and get all this extra paperwork, and they just want to be paid at the ending. So even educating your potential lender on different frequencies that you can be making the monthly payments.
And that highlights an interesting point between private money lenders and hard money lenders, which we'll be talking about next week, in that hard money lenders typically have the capacity to do more frequent payments and kind of bear more administrative burden that your average private money lender is not going to have or not going to want to do.
Yeah, and for example, if a private money lender, let's say they want the monthly payments, well, it might be in your best interest to actually borrow a little bit more than what you need to purchase the property and for the construction, so you have that money sitting in an account that then gets drawn directly to that private money lender. So again, it gives you that flexibility with private money lending that other sources of capital don't give you.
So that's debt. Let's dive into equity. And equity basically really means some sort of interest, typically an ownership interest in the entity. So the most common way this is going to be structured is that your private money equity provider is going to actually buy ownership of the entity that's doing the real estate investment. And typically, that's going to be a membership interest in an LLC, a limited liability corporation. An alternative way to get the same effect is to have some kind of profit-sharing agreement with them. Now, instead of them having ownership of the entity, they would have an interest to the profit that the entity produces. That can be useful in certain times when a lender doesn't want additional owners in, or, for example, the private money provider doesn't want to provide information to a lender. They can instead provide the money as equity through a profit-sharing agreement, and they won't need the level of due diligence that the owner of an LLC might need when you're using an additional capital provider.
That's a simple joint venture agreement that you can have an attorney draft up. It outlines the roles and responsibilities of each person. This person's going to bring this amount of capital. They're responsible for this. You find the deal. You're responsible for the construction, the marketing. You want to have all that outlined in that joint venture agreement. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of the private money lending presentation that we use to pitch for private money. We'll see you at the next segment.
You're an investor, a lender in commercial real estate, or you're an attorney, and you use a title company. National Title Solutions wants a chance to be your title company. Give them a shot at your business, and you'll find out why they're the best choice. Most title companies keep banking hours and have no flexibility. National Title Solutions will do whatever it takes on your timetable. You'll save money, too. Give them an opportunity and see the difference. Convenient offices all over. National Title Solutions. Call 800-NTS-2700. 800-NTS-2700.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. It's all about making money with real estate. Now, back to Real Estate Airwaves on AM 560, The Answer.
Today, we've been talking about getting private money for your real estate investment business. Private money is basically relationship money. It's money from people that you know, friends, family, colleagues, coworkers, people you meet at real estate investing events, networking events. There are limitations on how you can raise money, so be careful if you're going beyond that sort of sphere of influence that you have, people that you know directly. There are federal and state regulations, so make sure if you're, say, buying a list of potential private money providers that you are getting an okay from an attorney that what you're doing checks all the boxes it needs to check. We went into how you can kind of vet a capital provider, doing some research on them to set up a rapport that creates a foundation for your relationship, moving into their investment goals. What are they getting now? What are they looking to get? And what you can offer them, trying to find a space there where everybody can be happy. Learning about that potential capital provider's sources of capital. Do they have cash? Do they have lines of credit, a home equity line of credit? Do they have retirement accounts that they can change into self-directed retirement accounts that then they can then use in your real estate investments? Do they have stocks that can be used as an asset on which they can get some kind of leverage that could then be used for you? All of those are ways that you can use their resources to fund your deals and figure out how you can work with them. Lastly is a question of how liquid are these assets? How quickly can they get them? Is part of their quote cash stuck in a CD that's going to mature in 9 months, 12 months? Well, that makes it a little less liquid, and you have to kind of plan around that. Then we talked about going into actually your pitch to them. So, you've vetted them now. You've said, I've got a way I think I can work with this guy. Here's how I'm going to present myself to them. Once again, you're building your rapport. You're providing an overview of you and your business. If you got a track record, that should be front and center. If you don't, explain what you're doing and what you have done that's relevant to real estate. Tell them how their money's going to get involved in the process. How do they get paid? What fees are there? Should be none. What term investment required? Show them how their money's going to be secured and pitch it in the right way. You're not asking for money. You're not desperate, but you've got an opportunity for them that they can jump in and help you with. Then we talked about how you structure it. The two big ones are debt and equity. Debt can be secured and unsecured. There's a question of, are payments regular? Are payments at the end? How is their money actually coming out? Equity is typically done through ownership interest, but it could also be done through some sort of profit-sharing arrangement, typically set up as a joint venture.
Yeah, all these different things that we talked about is how to get OPM, which again is other people's money. Always remember, we're offering an opportunity. And once you begin to have that mind frame, money is a lot easier to raise than what you think. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of the private money lending presentation that we use when we pitch private money lenders. And on December the 6th, we're actually going to be talking about this in depth at my real estate meeting at 3009 North Kedzie. You could visit fliptoriches.com to learn more. And I know, Vince, you have a meeting where we talk about money all the time.
That's right. Third Monday of every month at our offices in Northbrook. Come to our site, Real Estate Airwaves, to click through for more information on that.
We hope you see you next week. We're going to be talking about how to get hard money and institutional money so that you can be successful and get all the money you need to do real estate deals. We'll see you next week.
You've been listening to Real Estate Airwaves on AM 560, The Answer. Come back next Sunday at noon for more insider real estate information from Joshua and Vincent. You can listen to past shows, contact them, and get free exclusive content at realestateairwaves.com. That's realestateairwaves.com.